The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time. And 877-927-6648 is the number to call. Hey, this is going to be a very interesting week. Wrapping up today, the February candle. So there's a lot to do thanks to all our great hosts from earlier on, going right through until this last hour. I hope I can do the same thing, give you very good information, and that should continue all day. The Dow is up 12 at 16,652. The S&P is up 1.87 at 1949. The Comp Index is up 960 at 4,600. Nice going there. The VIX is down at the 19.80 area, under 20%. The under 20, that is. Very good. The E-minis, you can see right here, 475 made a peak C, a leg C on Friday. Will make a peak C of today. The E-minis do not go to 1969. The MACD is very strong. The stochastic is at 90%. It is really strong. This market should go higher. The weekly chart, look at this. See these little hairpins at the bottom? What did I hear? Tweezers. They look like tweezers. These tweezer bottoms can be very, very positive. My work says they're never positive until the price starts to close above previous left side peaks. So far, this is good action. The peak that we're looking at in the E-mini is 1940 from the week of the 5th. Last week, the week of the 19th, we went to 1940. We went to 1884. Nope, wrong week. The week of the 19th, we went to 1933. That was the week of the 19th. The week of the 26th is really what I meant to say. We closed at 1942.75. Oh, that was a long-winded way of saying it. Up 2.75 over the previous high of importance. That makes any strength this week important, but not nearly as important until we take out, don't have to close there, just have to take out 1968.75 by 1/4, that is by 1969. This extends leg A. Very important because it gives the MACD a chance to at least attempt to cross positive. It hasn't done that yet. Stochastic's still down at 35% in the weekly chart. This is a 120-minute chart, and this is why I wanted to spend a moment here. You see this? We were looking at arch formations. We thought there'd be another arch formation, which there was, except at 1886.75 on the 24th of February at noon, there was a turnaround, and that turnaround took the E-minis to a higher high. And that higher high above 1943.75 essentially said, hey, keep it in mind, because at this particular point, what we're looking at is a breakout that says we've gone to peak A, peak B, gray A, a blue B, a blue C, and there should be a D. And that would suggest that you've got to look for a potential arch formation with some consolidation at 1970 or higher in the E-minis. But even getting there would be a really big positive. And we'll go into that with the different chart patterns. I showed my subscribers to my opening call over the weekend. I said, hey, look at this. We're looking at something very interesting here, because every way I analyzed it, it suggested that we should go higher before we start to retest certain key levels on the downside. So we are positive. We have a short position that we've had for ages, since July. It's still working very well. This sector just does not want to rally or hold any rallies, and the stocks that we've selected over the last couple of days have done extremely well. Now, we are long, I should also mention, we are long the Dow. Now, let's just go to this. The QQQ series, 1, 2, 3, the QQQs have made a leg D. It could be a peak D, but when you're coming off a low of significance, and I believe that the low of the 11th of right there. The low of the 8th in this case. The low of the 8th of February at 94.84 in the in the QQQ series, that's the PowerShares QQQ Trust series, has gone very quickly to a leg D. It should have pulled back sharper today, so it's holding really well. End of the month buying, probably. Now look at this. If the QQQ series at 103.67 up 24 cents is able by Tuesday or Wednesday to break into the 104.60s, that's a lot. It's a lot to ask. But if it's able to do that, 106.47 is the 200-period exponential moving average. That would become a magnet for the very first time since it broke down back on the 5th of January. Okay. Weekly chart still leaves a lot to be desired, monthly chart as well. But when you're looking at the monthly chart, let me just show you something. This is what I spent a lot of time on over the weekend, besides looking at many charts. Hey, I have to tell you, Investors Business Daily, I've never seen such a radical shift. Number 1, stamps.com. Number 2, Coresight Realty. Number 3, Facebook. Number 4, Ellie Mae. Number 5, Ryanair. Number 6, O'Reilly Automotive. Number 7, Pool Corporation. Pool Equipment and Supply Centers in North and South America and Europe. That's really interesting. Let's see. On the favorite list, near all-time highs, pools, swimming pool. I'd call that a luxury in most cases. I'd call it certainly discretionary income. This is very interesting. And we've been talking about the jobs market possibly improving quite a bit here. Not what you'd be reading, but I think that's what the underlying story is. Let's go on. Edwards Life Sciences, well, they come in and out over the years, over the decades. They go in and out of favor. They're back in favor. Vanity Inc. Provides a suite of payment processing services to retailers, merchants, and financial institutions across the U.S. Nice action. Smith and Wesson, we've heard of that, right? Let's see, Smith and Wesson. Wouldn't that be a gun manufacturer, firearms, weapons, making recovery highs, I think. Oh, look, Ruger is in the list. Not the top 20, but it's there as well. Isn't this a fascinating market? What a fascinating market. A couple of online educational institutions. I have to tell you something. I don't remember seeing quite a mix and such a sudden change in the IBD top 50, but certainly the top 10 to 20 stocks. Very interesting. A lot of names I'd never heard of before, or if I had, they were really peripheral to the market. Okay, so that's what I wanted to discuss. What is going on here? Are we looking at a raised base of support? And yes, we could have another correction, but the 15,000s of the Dow should hold, and the S&P recent lows at 1810 level should hold. This is something. Is this the moment to talk politics? No. We've first got to finish the numbers. So let's just go on here. We've got, if I can get this done before the break, what have we got? We've got gold. Gold is up $12 to $12.33. Very nice action. I still think it's within a rectangle formation, up and down choppiness. Silver's up 10 cents at $14.79. Crude oil, haven't got that. I've got bonds up a half a point. Hey, bonds are up as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Hey, what about this? Alcoa up 19 cents at 905. U.S. Steel, where did it go? U.S. Steel up 60 cents. There's something going on. You remember we spoke about this for I've been speaking about this for a long. Leg D in the U.S. Steel up 64 cents at 8.95. A lousy monthly chart, but boy, this is really impressive action, and it's been going on for a while. There's a rotation going on, and I'm convinced that we've seen a rotational correction throughout the last year. That's number one, and number two is this rolling recession. I'm convinced. I don't know how else. When I went through the charts over the weekend, all different sectors. I mean, sectors I didn't even know they existed. I'm looking at these and I'm saying, wow, they've had a smash to the downside and now they're coming back, or they've had a fantastic move to the upside and now they're coming back. And I even looked at this morning. I couldn't understand why on earth I don't have the notation for it, because of course I've done the notation for 20, 30 years on Berkshire Hathaway B shares. Redid it this morning very early. Leg E, right on the 200 period exponential moving average at 134 up 211 for the first time in a long time. Berkshire showing some strength both in the daily and the weekly, but what's reflected by the end of today will be the monthly chart. Has a really outstanding candle. It's done it before, but not this kind of candle where it closed at the high on the 9-period exponential moving average and made a lower low and a whopping engulfing candle from last month. And the MACD is just beginning to flatten out. The stochastic's just turning up. It hasn't crossed positive yet. Could still do that today. And the histogram is improving just a fraction, but the on-balance volume and relative strength have held very well. I think there's something going on here. And if you're looking at the patterns that I love to always notate, look at this. There's right there. You've got yourself a trend line that is way down to the 108, 109 level. You've got another trend line that's a rising trend line that goes right to the top. So it's an expanding wedge, and it's still expanding. And what's important about this is that you're able, for the first time, to say, wait a minute, there's a gentle curve going here. Is it possible that before there's a chance of a right shoulder failure, if there's going to be, Berkshire Hathaway, B shares, could, in fact, trade in March a little higher to really give a test to the 139, 141 area? That'll be a big test. Why? Because the all-time high was 152.94 back in December of 2014. So 125.94, let me just put that in, or 125.94. And let me just say that was 12.2014. And here we are with a low this month of 123, was it? 123.55. So how can that be? I must have typed that incorrectly. That must have been, oh, of course it's typed incorrectly. That's 155. 152.94. Oh, just reversed it. That's all. No problem. 152. So that's 25 points, not even 25. It's like 17 points. So it's an 11, 12% correction. Now it's trying to rally. I'm impressed with a lot of things that are going on here. The reason why we want to be long, we want to remain long until we get taken out. And then I'll be looking towards shorting. But at this particular point, let this play out. Now, what I wanted to say earlier on, I didn't finish my thought. My thought was that there were legs D and E that we had looked in some of the charts. Not a big deal, because when you are moving off a low, and if that low is an important low, it doesn't have to be the low, but certainly an important low of time, it means that you can go higher. And of course, you're going to get a D. Of course, you're going to get an E and an F. What's important is that they recycle. In other words, if there's a pullback this week, and then there's a brand new move to about 135.25, the 200 period simple moving average, I could say that's going to be, let's call it an F/B, that it's recycled. 1, 2, 3. No, it's not an instant restart, but it has the characteristic. So restarts or new buy modes can start, by signal to buy mode, can start on the way up, so that you get one buy signal to buy mode to D, and then it could recycle higher. After all, if you're going higher, you're bound to make a couple of peaks on the upside, right? All right. Question is, will you be buying SCHN? What is interesting is that not all the steel stocks were working. Yep, this one's working quite nicely. Look at AK Steel. AK Steel is the one I was going to buy. Gave it a chance to settle down. It didn't settle down and settle up. I'm going to answer that question in a moment. Let me just finish this because I need to put a peak A. There's an example. A, B, C, D, E. I'm calling it F for now. There's nothing to do. I could say F/B. I'll put F/B just to be clear, because the MACD is still good and the stochastic's at 85%. So this could go higher. But in the meantime, it's holding very well. 302 on AKS is possibly the next level of resistance at 285. So the question of Schnitzer Steel, wasn't it? Yeah, Schnitzer Steel, having made an all-time, not an all-time low, but a major low just recently. Oh boy, is that a major low? The last time Schnitzer Steel went from the high in July of 2008 of 118.55 straight down in November of 2008 to a low of 16.45. It ran up to A, B, C, and then fell, C minus. So it ran up to 69. Boy, does this have big moves. And then it came back down, and it came to 1170. 1170 is lower than 645. So last month was basically a multi-decade low, going back to the 2003 levels. Yeah, so now let's look at it on a daily basis. All right, my answer is I would do this. It's trading at 1420. It's peak A, B, C, D. Let me just put it in here. Good question. It's the one I forgot to look at. I looked at it about a week or so ago, and then I forgot over the weekend. C, D. and this is an E. So this could be a brand new A, calling it a gray A for now. Okay, yes, my answer. The answer is yes. I would start a position in Schnitzer, SCHN, trading at 14.20, up 32 cents. I call it a start. The reason why I call it a start is because it doesn't quite have as strong a pattern as the others we looked at, but they're all in an up move at this particular stage. SLX is, I believe, the steel index. Yep, my steel index has made a peak E, and it's running nicely. I like it. I like the steels. Now, can they pull back because they've had a very big move from, in this case, the 15s to the 19s, 4 points, that's 20%? Yes, I think they can pull back, but I would start a small position, and I'm going to emphasize that it's a small position in Schnitzer steel, and you've got to be prepared that it could make the H pattern, and that H pattern would test to make very important 1383. That's why I'm saying a small position. But I do think from the weekly chart starting to improve that it might go sideways just a little bit. The moment it gets to 1453 to 1463, it's going to want to test the previous high, as the others have done, and that would be at 1482. So the answer is yes. I'd start a position. All right, I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 44. S&P's up 5. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Dow's up 30, S&P's up 4, and we're going to go straight to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you. You'd like to look at?
Ford.
All right. So, folks, we're looking at a stock that is at $12.58, up 11 cents. It's trying to get to a leg D. It made a low of 11.02, and that low was actually a significant low because the last low was that crazy August smash to the downside of 10.44, and within just 7 weeks or so, it was busy trading at $15.84. That is, by my calculation, I would have to put 15.44. I would have to put that into the category of almost a double, and it gave back 4 points. So it gave back, what about, so 4 out of 15, gave back about 30%, comes down to the 11 area. In the weekly chart, you can see 11.02. And what does it do at 11.02? It rallies pretty nicely. And I've been saying to subscribers, I just don't understand it. Everything about these stocks, when I look at it, I can't even say fundamentally because I'm not doing the economic picture. I'm looking at it socio-economically. Everything about us is wherever I go, I'm seeing American cars more and more on the road. In fact, if you look at the pendulum that swings from one side to the other, you have to say to yourself, have we turned the corner so that the foreign makes, especially the Japanese, are going to see fewer and fewer sales as American products see much greater buying? That's my thinking. But when I look at the charts, I'm having a tough time because I would love to own Ford and General Motors for many reasons. One of them is I believe very strongly that we're going into a Buy America phase, and that should favor them. So I love the action right now. Do you have a position at all?
Yeah, I have a position. I saw it had a big hammer candle on the 24th, and when it kind of touched down into that on the 25th, I picked up some in the low 12s, right around like 12.10.
Very good. Okay, so you have a nice comfort zone here of about 50 cents. And I'm going to suggest to you that I can suggest it. The market might not hear it, but I'm going to suggest to you that there's a chance that you have picked up something that might become a core position. And I'll tell you why. The pattern that I'm looking at of this Chapman Wave Roman candle in the weekly chart of the week of August the 28th, when that 24th smash occurred and then rebound, is saying to me that Ford, for much of one of the weeks, last week and the previous week a little bit, went into halfway of the candle of August, and it traded under 1335. It didn't hold there, but it did trade there. Everything about the mechanism of this particular candle. Now, this is not a classic Chapman Wave Roman candle in the negative sense because it's a green candle, not a red candle. But the principle really does spill over. And the fact that it was trading there and it didn't go down to the low, but instead turned around and like a trampoline, it's bounced off that level very strongly and closed just above the 9 EMA last week, and it's now above the 9 EMA into the second hour of trading of the next week, the end of the month, almost the beginning of the next month. I love what's going on. Now, do I love it to be able to say to you, oh, this is going to go to the $14.18 level, which is a 200-period exponential moving average, where there was so much activity last year? My eye says it's really possible with 1375, the 9-period moving average, weekly trend line moving average. That is really important. But I would prefer to say to you, everything I'm looking at thus far, and all the work I did over the weekend, is suggesting that the steels and the autos, these American automobile companies, are actually going to do a lot better than one would think. I love what you've done. You've got into it really nicely. You've got a little bit of a cushion here. The moment Ford, and I think it will, makes leg D by going to $12.66, I'm going to say to you, if you can keep that core position, I would think of it this way. The core position I'd split into a half or maybe 2/3. saying I'm having a mental. I would not put it in as a physical stop because you need to analyze it if it comes back. But I'd keep a mental stop on one part of my position to say that if it came back to $12 and what was the low? Yeah, $12.32. So that would just undercut a little bit your entry. I want to just watch it real closely because I might want to take it off and say, hey, you know what? I can put that back again later, but I don't even want to see it. So I'm just saying, let's keep it a mental stop and say 1/3 of the position. But if it takes out, and it could do that even today, 1266, goes into the 1266 area, I'm going to say something to you that might be a little bit anathema to the way you want to trade. I would add a very small position right there at 1266, and that would be my trading position. And I try to keep all the rest out of the picture at all completely, and I treat the trading position as the position that's going to tell me the inner strength of the weekly chart. This is going to be really important because if on Friday at 4 o'clock this week, Ford is trading above $13, that is very good action for the weekly because it'll start to get that MACD, maybe just about to cross positively. Stochastic will get off its butt from 27. It really needs to move towards 33, 35. I like the action. And if it starts to pull back under that 1230-ish area, then I'm going to say, hey, maybe it's a little early. But I love what's going on here, and it's like thumbing its nose at me because I've been trying to get back into Ford for a while. And I thought about it over the weekend, and I said, I have to let Monday play out. And Monday, let me see what GM's doing. Yep, GM, nice candle. I think you got the right one. Very good.
You know, it's funny that you said that because I was thinking of trimming some when it made its leg D at 1266 as opposed to buying more. So that's interesting.
Oh, well, the reason is when you're coming off serious lows, right. D is really what you want to see because you want to see a pullback and then start a brand new buy mode. That's the exciting thing about coming off lows. So that's number one. Number two is I'm going to make another suggestion. You might, instead of mixing, you might want to mix it up. Get a little General Motors as well.
Okay.
Okay. Thanks for calling. Good eye and good.
Yeah, go ahead. Thank you. Appreciate it.
Okay, good eye and good entry. Speak to you soon. Mark in Denver. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing very well, Basil. How are you today?
I'm well, thank you. Oh, well, I was better before I looked at Ford.
I'm calling about some stocks I picked up back last Wednesday before the oil inventory report came out.
Yes.
The one in particular that I'm calling about today is, which we've talked about in the past, is Denbury Resources.
Where are they situated?
I mean, where are they based out of?
Yes.
That's a good question. All right,
it's not that important. I'll tell you what I want to do. I want to do a little bit of work during the break. I'll do it on the weekly chart because this is just starting to look a little bit positive for the first time. We'll be back with Brent in Martinez, California, looking at DNR, Denbury Resources. Dow's up 78, S&P's up 9. Very nice.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I just want to do this. We're going right back to Brent, but I did want to do that. I forgot all about it. I've had it already, every single break, and I kept meaning to show it. We were right here earlier on. I showed in the den when I came in at 11 o'clock. We were breaking out, and I'd already put the up arrow in to say that this should go, and I'd shown the left side, right side price time match in the 10-minute E-mini, and my target was this trend line, which would have been right there at 1952, and then the right side, left side price time match would be 1957, the high of 1 o'clock on the 26th, and that should come in here by 2 o'clock this afternoon. We've almost got there right now at 11:40 with a high of 1956.25. So this is just some of the techniques, the left side, right side price time match using a plumb line. This is the plumb line in this case. It was exactly the plumb line, the perfect plumb line. And that's the midpoint of the left side to the right side of like a boat, a left side cup ellipse, and then the right side continues up. Could be an arch pattern. In this case, it's the upside. And the reason why I loved it was that the VIX gave a peak F top, peak E top, right at the 200-period exponential moving average, and is pulled back under the 9 EMA. It looks like it might, by the end of the day, test 799 to the low that was made in the 26th of 797. Sorry, Brent, I just kept meaning to do that, and I've forgotten. If I didn't do it now, it would be too late. So, Brent, DNR, I'm going to just make 2 suggestions. The pattern that I'd be looking at here is the either a V or a cup-shaped pattern that creates a left side and a right side U, lowercase u, put together on the right side with another U. In this case, because the lower left side low of the 20th of January of 0.86 wasn't taken out on the 19th of February because it went to 0.89, I would say that that's a positive aspect. But most importantly, what I want to see is at $1.28, up 9 cents, it really needs to get into the 141, above 141, and it needs to do that without pulling back to 112. It needs to get there, and I would say this is a case where I want to see speed. It turns out I just said 146. Lo and behold, I just saw that the 9-period moving average of the weekly chart is at 146. And look at this trend line that goes all the way from the high that was made back on the week of the 24th of February. We are now into March, right? Or the end of the week of last week of February, last day of February, except this is 2012. it went to 21.37. So it's come back to the most recent lows of 0.89, and in the weekly chart made 3 weeks ago. So I like the start of this. The MACD has held well, but it hasn't really given it strength. It's the stochastic that has to do it. So I want to see the stochastic move with the price as it goes over 146, and I want to see the stochastic get to 12%. At that point, I'm going to say to you, good. That's the first sign that I'm seeing, with a nice positive divergence between the weekly chart stochastic and the price. That should allow it to try to get back to the high. And if it takes out 167, that'll be, I'm going to call that leg D / maybe A or B, if whatever it is when it takes it out. But what's really important about this pattern is that the double U, as opposed to W, double U pattern, two cup formation, can become a very powerful move, but only if it doesn't stall. My biggest concern here is if it stalls and doesn't get to 141 to 140, anywhere in the 140s by Wednesday at this time. No, Wednesday by 2 o'clock. If it hasn't done it, then it might stall. But you're in at a good point. So I'm just going to say to you, nice entry, gives you a bit of a cushion, but at the same time, the speed that we've seen over the last 3 sessions, I'm not sure if it can keep up for a 4th session, but by Wednesday, it should be pushing into the 131, 132 area. Love to see 146. I hope that helps you.
It does. I bought in. I have 4,000 shares at 92 cents is where I bought in. So that gives me.
So you see, what's really nice about that, not only now do you have a cushion, you've got a cushion with the right direction, and there's a leg D unfolding in the 120-minute chart, but there's also a Chapman Wave squash between the stochastic and the MACD, and that suggests within another leg up, there should be a sideways to down move with a high-level consolidation. And if the stochastic at 90% can hold above 88%, then you're going to get your 140s. So let's see what happens. Hey, great entry as always. And this is a chart pattern. I would have had difficulty actually picking it up because I would have wanted to see the actual move to the upside first. You took it and got it exactly right. Congratulations.
All right. Thank you very much, Basil. Have a wonderful day, and I'll look forward to talking to you soon.
Thank you very much. Congratulations. Nice entry. So, folks, they're up 72 on the Dow, up 9 on the S&P. The comp index is up 27. The comp index is a little bit stronger percentage-wise. What I did want to do is I just want to show you something here. Had a lot of calls. Well, first of all, SLW. I had an email about that. What was the question again? Where do I... good morning, Basil. Would you look at SLW this morning? I have a peak F on the daily. Yep, I have a peak F as well, with the 9-day starting to flatten out. The weekly is in leg A, correct? With a little over 60%, a little scary as of Friday. I do have a small position, considerably lower, and look at it as a core position. What would be a reasonable pullback on the daily and on the weekly? Thanks, Greg. So, Greg, I'm going to make a suggestion to you. You've got your call. Don't be over anxious now. It's a pity that, at the 200-period moving average support at 1450, that probably would have been a nice place just to enter another little trading position. Now I'm going to suggest to you, either you've missed the next move to the upside, or you will get, and I do think that there's a good possibility, because I think that the dollar has a little bit of strength here. If the dollar and the market go up together, that's always a good sign. I like to see that. The dollar's in leg A, B, C in the 120-minute chart. Double check. Yep, ABC in the 120-minute chart. And I'm really, the way gold is acting, I think it's buyers just, they're buying because they're looking at something I'm not looking at. But the way I'm looking at gold itself, so the SLW is a silver wheaten. I'm going to look at gold, and then I'm going to look at the gold. This is a high-level consolidation. It's got that arch formation, the pattern I call the rectangle with an H within it. So that so far says there should be limited upside, and at some point you should be testing, instead of 1233, at some point you should be coming back to really test 1200 to 1195. A break underneath that would say, okay, be a little careful because it's going to consolidate for a little bit longer. But so far, this is outstanding action. Now, here's the big thing. SLV is silver. SLV has pulled back quite sharply. So SLW it's not even, you can't even put it into the same category. It's a different chart pattern altogether. It is independently strong. I like it very much. I could say, why don't you just nibble here at 1574? But what it does then, it makes your average, it really lowers your average, or it raises your average. I'm going to say, have a little patience. Maybe you've missed another move to the upside, but your core is going to make up for it. So why don't we do this? Hold on tight and have a little patience to see if 1457 to 1430 is hit by a week from today, or a week from tomorrow, Tuesday week. To give it about a week. If it can pull back and get into that range, and then the MACD and stochastic in the weekly hold very well, then I'm going to say now add another position. To add here, I'd say that you'd be back at 1575 even if you did rally, so I'm going to say hold off. This is Basil Chapman, Tiger Technicians Hour. I'll be right back, and I want you to look at a question about U.S. Steel.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I've got a couple of things, a little joke here going on here in the Dan. Well, the question on U.S. Steel, X trading at 903 up 71 cents. Leg D, very strong. I suggested that if Jane the Dan is looking to buy it, then you could just have a little tiny portion right now at 903, expecting that your real entry would be under 850, preferably about 831 to 810-ish area. That's where, and I'd have patience to wait for it. Problem is, if it gets there after peak D, maybe it's going to be putting back deeper. So it's a little tricky, and that's why I'm saying if it's going to keep moving, it might not give you a chance to get in. Therefore, you want to just, I should have done that as well. We've tried a few times. We should have just grabbed it and got in and said, not a full position because it's already extended, But, and that's the way I would do it. So you can just start a little bit here, because it might not be pulling back very much. It is it's in that area, the rotational area. That's all there is to it. So, and when it finally does pull back, you might want to say, whoops, it could go a little lower. But that's my thinking. Start here. I would prefer to see it under 850, especially down to the 830s, to actually start a position, and that would be the best entry. Then the question is, Basil, do you have a chart on Donald Trump? I don't. I think I'm going to be making a chart on Donald Trump, and I have particular ways to do it. That's number one. Number two is I make a mental chart, as you know, on all these guys and every one of them. I've done it for years and years. And over the weekend, not over the weekend, last week already, my thinking was Donald Trump has made a daily peak F, and now there's this big pullback coming in. The weekly chart is still only at C. So that's just the way we do it. We'll see what happens tomorrow. You never know. I get a feeling that a lot of people who really would like to vote for Donald Trump, it's just getting too tiresome. How many times can you attack people? This is not a reality show. This is the presidential campaign. Go for specifics. Just give us some specifics. That's what we want. I think that's the thinking. That's number one. Number two is when you're looking at the different candidates, I also, at points, you remember way back with Obama, I put him into a category of stock. So I'm going to do the same thing here, and I'll figure out who Trump is. In back of my mind, I've already got that. And then who Hillary and Sanders, we'll try to put them in, and then we'll see about the other guys. But in the meantime, it's going to be really fascinating because there is a point where you say someone is winning. I'll never forget in the Olympic Games a couple of years back, there was one of the American athletes was way ahead. And then what did he do? He did this thing sort of like, where. It was just, it's as if he had the race in his hand and he just spoiled the moment. And that's what I'm thinking here, that in some sense, not that Trump has the race in his hand at all, but he had the lead, a huge lead, and he doesn't know when to stop. That's going to be the big thing. Does this guy know when to stop? We'll see. I mean, this is just fascinating. I'm not telling you who to vote for. Remember, this is the politics of politics. I couldn't care about the rest. I'm just personalities. That's all we're looking at. So I wanted to get that out the way now, market-wise. Last day of the month. Look how important this is. Let's go to the monthly chart. I'll show you a couple of things. We were looking at IND. Hit the right. There we go. IND, U. So the Dow is closing the month. Well, we don't know if it's closed, but if it can close anywhere here, even if it gives back some of it, that is a really nice candle after these two Chapman Wave Roman candles, number one. Number two, you can't go all the way through. If you look at the New York Stock Exchange, remember, my thinking here is that the NYA is the old school, like the IWM, and that the Dow is actually the new school. So here we go. IWM, nice candle. New York Stock Exchange, nice candle. On the day, the VIX index, remember I showed you the TVIX? Well, look at the VIX. The VIX is now at 1949. The VIX needs to close well below 20. And in fact, the 200-period moving average of 19.64, I want 19 point, I don't know what it is, I haven't got time. 19, wow, if we can close under 1910, that'll be a really good sign. Hey, thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.